the market can care less about your goals, your time frame. It's kind of like a mother-in-law, like it's just, really nice person, really accommodative, but man, don't stay too long. Get the hell out of there. It's they really don't care. In fact, sometimes I feel like, and I've been doing this for, oh my God, 20 something years now. But sometimes I still feel like the market's out to get me. Like you're perfect. Make that one little mistake and the market just nails you on it. Like it's waiting to crush you. They really don't care.
So yeah, today we have a lot to cover. Michael is coming on with me live to talk about how to get funded this year, some things you can do to scale up your trading in 2024. And Michael is really someone who has a lot of interest in the topic. So Michael, welcome on the podcast again. Welcome on the channel, of course. And good to have you here again.
Yeah, great to be here. Looking forward to chatting to see what's on the mind of the traders out there. Fantastic.
Definitely, for sure. So let's begin with this and kind of tell me where we're at in terms of prop firm these days. There's been a lot of controversy last year about different prop firms closing down, different kind of rule changing. What do you think we're kind of at right now in terms of prop firms, in terms of like getting funded as traders?
Consider me the minority. I kind of like when this stuff happens. Like, I like when there's shakeout to anything, right? Whether it's the Bitcoin movement, even like the Roaring Kitty movement and stuff like that. A few years with GameStop. I love when things are disruptive because it makes the other players tighten their belts, and it only helps the consumer, or in this case, the trader. So when you get these little sort of shakeouts, it allows the firms to tighten up their belts and make sure they're playing more on a better playing field, and also allows the trader to think, how am I going to perform my own like sort of personal risk management? Maybe I have like two firms I'm playing with stuff and diversify my thing. So either way, I think it helps the industry, it helps the traders, which is obviously near and dear to us, and let's keep that shakeout, let the good players stay, and start fresh in 24.
Awesome, yeah, definitely. A lot of big changes there which we can talk about. Also, we'll take some questions. If you guys have any questions, make sure you post them in the comment section below. We'll look at your comments. We'll kind of go through some questions you might have about prop firms, about getting funded, and just going to make sure it's working fine. We have Joe here in the chat, which is awesome. Welcome, Joe. So yeah, any questions you've got about prop firms, about scaling up, put them in the chat or in the comment section once this is done being live, of course. We'll get back to you as always. And we want to talk about a lot of things. We want to maybe share some trades. We can go a lot into different things. But we want this kind of useful to you and applicable to you. So any questions you have, post them in the chat. We'll be able to rock with it and go forward. So why did we start? I think a lot of one of the big issues with people and kind of prop firms and getting funded is that they kind of take prop firms evaluations or challenges too early. Like they're not really ready for it. Then they fail. Then they feel like because that's all the prop firm is bad and stuff, or there's something against them. How do you know when you're ready for kind of scaling up and getting to the next level in trading?
Yeah, well, from a coaching standpoint, this gamification of sort of getting prop firm funded is quite concerning. We see the sort of path and the fork in the road where some go left, some go right, and we see the ones that go, do the right diligence and work. They ultimately not get funded, but they stay funded. Really, it's a sort of a checklist, and you don't need a firm necessarily. You can just do it on your own, but say, look, these are the things I need to do. Check. And the ones that you don't have them, the discipline, the focus of treating it like it's, like a real prop firm, you're working on Wall Street kind of thing. A lot of this is mindset, but when you have those checks and balances and you have a track record, you have proven that you at least have a shot, you could take the next step. But don't go the next step until you have that. As opposed to, hey, I'm going to take this challenge tomorrow morning. I don't know what I'm doing. I don't have a plan. Let's do it. You clearly see the ones that go in the wrong direction and the ones that end up getting funded but staying funded. It's kind of a simple thing to do, but again, it's kind of getting into that mindset of being structured and disciplined.
What about measures? Like, do you want to see a specific performance in terms of like how much a profit is able to get in a month or that kind of stuff? Or is it more based on like the overall picture of like your equity curve and things? Because a lot of people might be profitable, but then they blow up on like only having like a small drawdown that kind of hits their maximum drawdown in the prop firm. So how do you kind of figure out if you're good enough to pass the challenge?
Yeah, well, I think this has changed a lot in the past year. Again, helping the consumer, helping the trader, where you have a little more time. There's not that time constraint that you have to pass a challenge. But let's make this simple. Not make a 10-step program. Real simple, guys. This is the takeaway. Follow risk management rules. If you can do that, you're in the game. You'll stay in the game. Your risk of ruin is virtually zero, and you may not hit the challenge in 1 week. It may not. It may take a month, 2 or 3 months, but you're going to be in the game, and you're not going to be just taking these challenges, paying these fees, ridiculous over and over again, and just kind of like the monkey hitting his head on the pole. Follow risk management rules, and you'll stay the course. You'll have a bumpy road here and there. Sometimes the market won't even cooperate. That's not your fault. Do your part. What can you control? Risk management.
That's a good point. So you mentioned there's things you can and cannot control about the market and about trading in general. Like you cannot just control what price of something will go, what will happen, what news will come up, but you can control how you do things, your process behind it, and of course, you mentioned your risk management. Give me a few key pillars of like risk management. What are some things people can do to at least make sure they have decent risk management in place when they trade?
Couple of few things too. And by the way, there was an example last week where someone was really frustrated, they didn't pass and everything. And I said, you know what? You had a trend-based strategy and your market wasn't trending. So that's okay. I mean, you followed all the rules, you did it. That's okay. In fact, I sent them a little congratulatory sort of, little document stuff. And they were like, what are you talking about? No, that's good. You should be congratulated. Couple steps. Size. Size is the most important thing that we can control. It's not about individual trade risk and stops and stuff. Yeah, I mean, that's good to have a plan and be consistent. Size kills. And how many times have people blown account or failed to pass a challenge? Maybe they didn't do the right thing, but what did they do? Size. If you have small size, very rare, very difficult to blow an account or blow a challenge. So size. Also be consistent where you know you're wrong. It's okay. Move on to the next trade. We're wrong all the time. I'm wrong already. The market hasn't even opened yet. It's okay. Close the trade out, move on to the next one. That's the beauty of prop firm stuff. And by the way, that's real life. When you're really trading live capital for a prop firm, happens all the time. The risk management and staff, they encourage you to get out, move on, take a break, wait for the next setup.
Good question here from Joe in the chat asking about what do you think of these moving average strategies?
Everything has a sort of place. It's not what they are, it's how you use them. And I think the difference is, and it's a good question, Joe, is people use them as sort of a red light, green light, and generally they're lagging. So it's kind of like, you're kind of late to the party, right? But what they should do is filter out trend, filter out direction. So if you have some moving average cross up, it's not about entry. It's about, okay, now I'm going to focus only on maybe a certain direction. And maybe when you add a little confluence, like a sort of a point of control or a major thing like a VWAP or some kind of volume things, when you marry those together, what it does is it acts as a filter. So the bottom line is, I love these moving average cross type strategies, but use them correctly. They are not red light, green light. And quite honestly, if they're red light, green light, you're usually late to the party. And us pro traders, we're fading you because you got in late. So wait for certain things like your sweet spot of entry. Use them as triggers, not as entries.
That's a good point. So it could be where you have these to filter like a bigger system, like a bigger way to enter the market. Like you kind of maybe using the bigger time frame to help you pick the right entry on the lower time frame and stuff. But yeah, as a rule, if you just want to kind of go in one go above, one go below, that stuff is a bit unreliable.
Yeah, and simple, Joe. Like an example is you're looking for something to buy at the store. Like you want to buy a new lawnmower or something like that. You like it, okay? You need it, okay? You're waiting for it. And now, okay, I want to get one. What do? You wait for it to go on sale. You don't just rush to buy it. Maybe you need something the next day, but you wait for it to go on sale or let me shop around. Or so the moving average cross is the identifier that, okay, now I'm getting interested, all right? Now let's see if we can get sort of, a wholesale price and then sell it to the retailers.
Good point. Good point. Now, when it comes to drawdowns, some people see the drawdown and prop firm as like, it has to be the biggest number possible. I got to be able to, I don't know, some people might look for like a 10% drawdown, a 5% drawdown, 8% drawdown. Does that play a big impact on your results or your performance in trading, or actually if you pass the prop firm or not, or is it like pretty much the same thing? Just adjust your risk and kind of deal with it.
Yeah, I mean, sometimes when you see a lot of people ask me, like, what's the maximum drawdown? And my response to them is, why are you concerned about the maximum drawdown? I mean, why is that like almost like the amount of money you're available to risk or play with? I mean, if you hit the maximum drawdown, you don't have to worry about it. It's a game over. And you have to, try again. Focus on executing your plan And if you keep size small enough, that max drawdown shouldn't even be a factor. And if it is, it is. It just, hopefully the market beat you and not you didn't beat yourself. That's kind of the key differential. But let's not focus on max too much. And remember, if max is pretty big these days, like 10% or whatever it is. You shouldn't. Something is definitely wrong if you go to the max drawdown. And there could be possibly two things: your strategy, which most of the time people have pretty good strategy if they're ready to take that challenge, but it's usually themselves. Size, poor risk management, poor discipline. So don't even get to that stage. When you start talking about that, chances are you're probably going to hit it.
Good point. How about some firms have like different rules for drawdowns? You might have like a trailing drawdown where it moves up over time. Some firms are like locking it in at a certain level when you move in profit. How big of a difference does that make? And like, what's the difference between these kind of options for drawdowns in prop firms?
Yeah, and it's a tough part. I mean, getting funded, I've always found is relatively easy. It's not relatively, but you'll get there. Now you got to keep that funding, and that drawdown's kind of chases you, that trailing drawdown. Again, I sound like a broken record, but size is so important. I mean, you really want to keep that size in, and we all want that home run. I mean, we all want to be, okay, I want to make a living and quit my job, and I need this much a day. But the market isn't like a cash register in that sense, where you push a few buttons and it spits out those bills. You earn that, and the grind, the slow chipping away, without getting to the point where that drawdown catches up to you is sort of the key. So especially after funding, when we do our one-on-ones and consult, for our traders, we really want to focus on, let this start to be a boring game now, because boring usually wins in the long run.
Tell me about this. So whenever we have a program where we teach people how to get funded with prop firms, we kind of coach them through the process of getting capital, scaling to like 6, 7 figures over time. And I think one of the biggest keys is like being able to understand when stuff doesn't work out. Like, how do you fix it? How do you come up on the other side better? Like, for example, when you fail at platform challenge, which a lot of people fail in the programs, but some still fail from time to time. How do you kind of get them around? So you go with them to this review process on the call. You kind of get them to sit down and think about what they've done, what trades they've taken, kind of analyze how they do things. What are some things you look at for this review process with them? And what are some things people can do to review the performance on their own after a platform challenge?
Yeah, I love these calls. I mean, I usually they're not the best ones to make. I'm usually like congratulations calls and stuff. But I just say, how did it go? And I just shut up and let them listen, and listen. And basically, I'm trying to do one thing, is identify what was the root cause. Was it the markets? Was it the strategy? Or was it the person in the mirror? And a lot of times, it's the person in the mirror. So, okay, fine. What exactly was it? Was it the strategy was there to really get approval? And we go through a rigorous sort of approval stage to make sure they're ready and the strategy's there, has a positive edge, and all that kind of stuff. What was it? Was it the execution? Was it the trade management? Was it the risk management? Include size, discipline, all that. Was it psychological, or was it just they weren't focused? We try to find that root identification cause, and traders can do that themselves, preferably maybe with another trader if you don't have a coach. All right, let somebody else be the eyes. All right, journal assessments, things like that. Once you identify it, and by the way, that's not failure. This is like, if you identify what you did wrong, that's the biggest success home run in the book. You have just passed the test as going one step closer to being a pro trader. So identify, and then question, just let's work on it. What are we going to put the next time? And then you go next time. That's why we found that a lot of our people who take the challenge, it's the second time around. First time it's just new platform, maybe a little jitters, maybe too much excitement. It's that second time where they hit it out of the park. And that's from not trading better. It's from just reducing the errors they made the first time.
Speaking of these errors, what are the common mistakes people make with the profit challenges, or I guess getting funded in general? Because you could make a mistake like a few months after you get funded. It's the same thing. So what are some common mistakes people make with these prop firms, or getting funded, or kind of just scaling up overall?
Yeah, it's simple. I mean, the majority of them, and there's always like I hear a lot of like tech problems, a new platform, and maybe they weren't used to the whole system. A couple things: they didn't know the rules of the challenge, which blows me away because it's usually right in front of them, and they usually get reminders, and we remind them of all the rules and things like that. But quite honestly, it comes down to they had a strategy, they had a plan that pretty much gave them the green light to go. So it had a positive edge and everything like that. They just didn't follow the plan. I mean, they came to say, I didn't follow the plan. I didn't execute it. I have compliance errors. We have a compliance metric that we use on our side. what was your compliance rate? All right. And generally, if you're in the 85, 90 percentile where all your trades have entry, trade management, and exit according to the plan, generally speaking, you do good. So if that compliance rate is around 70, 60, somewhere on there percent, it's just inevitable. It's not going to happen unless you get lucky, which can happen. And that's probably the most dangerous thing a trader can have in a prop firm challenge, getting lucky.
I think there's something to be said about kind of in trading. A lot of people want to be right. They want to pick the right trades. They want to pick the right like outcome. They want to be able to catch the right move, and they want to pick also the best time, like the right time to get funded. They want to be able to say, I take a challenge now, therefore I get funded now, and I pass it. But there's some things you cannot be control about trading sometimes, especially like the market, the things that could change, a few news events, if you maybe strings of losses that you didn't predict or you didn't kind of anticipate. These things can really change like your overall challenge, I guess, and they could be making a big difference. But you gotta understand, is it based on you, or is it based on like things you cannot control that can happen in your challenge? And then if it's the case, then maybe you have to rework on a few things, but you can still take it and kind of get back on track.
Yeah, I mean, the market, to be honest with you, the market can care less about your goals, your time frame. It's kind of like a mother-in-law, like it's just, really nice person, really accommodative, but man, don't stay too long. Get the hell out of there. They really don't care. In fact, sometimes I feel like, and I've been doing this for, oh my God, 20 something years now. But sometimes I still feel like the market's out to get me. Like you do really you're perfect. Make that one little mistake, and the market just nails you on it. Like it's waiting to crush you. They really don't care. But the one thing the market do, and I make this analogy, is like just consider yourself like a little ant in a big desert, in a tundra with an elephant, and the elephant will crush you. But if you just pick a few little crumbs off the ground and run away, they're not going to waste their time. That's what this game is about. Just picking up crumbs. Don't fight the market, and accept the fact that sometimes your strategy won't work all the time. That's why we have drawdowns. We both had a little bit, we recovered this past year. Normal. Just keep the program, keep the pace, and keep compliance most important. It always comes down to that, executing your plan effectively.
If you guys have any questions on anything we talked about so far, the process of getting funded, how to get funded and stuff, how to scale up your trading, post them in the chat and post them in the comment section below if you're watching the recording. Of course, we want to be able to answer those. Maybe in a future video if we don't have time to cover them today, but definitely want to be able to cover those. So we've got some few that are pretty good here. We've got Ak who just joined us in the chat. Welcome, Ak. Good to have you here, of course. Ak is a good friend of mine. It's pretty awesome. Let's go with this question. So Cubby is asking, Michael, what's your opinion on backtesting?
It certainly has its place. And I think it's sort of part of the process of gaining confidence and determining if your strategy is worthwhile and stuff. Here's the thing that I have a little caveat with backtesting is what we do is we take a segment, say 5 years, and say, okay, let me run it. And here are the results. Oh, okay, Mike, your strategy performed like only 5%. Your strategy sucks. You're a scammer. Yeah, whatever. It's not the way it should be done. We don't do this in chunks. What are you trying to do? What are you trying to assess, right? What's the market context? Can we add some sizzle? Like, did you have a trend-based strategy? What was your results in the trending time frame versus non-trending? All right. What are some of the quirky things? I love backtesting, for example, is I get my hands dirty and say, what were the quirky nuances that happened during that time period? Such as, what was the percentage of days that the price stayed within the prior day's range? Now, can you just push a button in software and have that done? Probably not. Well, get your hands dirty. Grab yourself a glass of wine and get your hands dirty and look and say, wow, this thing just explodes when price goes outside of, say, yesterday's range or last week's range. Now I got myself a back test. Now I got myself some arsenal. So I love the back testing process. It's a starting point, but it's not a backtest work, push go. Let me sign up for funding and get funded and be wealthy the rest of my life. Doesn't work that way. I think, and we've noticed too, like we've spent many countless hours on Sunday mornings with coffee in hand, just getting our hands dirty, looking at charts, and I just don't think that can be replaced with push button results for past 5 years. I don't. Maybe I'm a boomer. I don't know, old school, but that kind of saved me in my career. So.
Cool. We've got a question here about this is interesting. So this is going to be a tough one. Joe's asking about what do you think is going to be the future of prop firms? We've got FTMO who got pulled out of the US recently in a few states. It seems like there's going to be a lot more rules coming up, a few more regulations coming up. What do you think that's going to take prop firms? Is it going to be like harder to play or even harder to trade? Like, are US traders going to be at a disadvantage because they don't have leverage, they don't have anything to trade with? Or is it going to be a good thing, you think?
I think I said earlier, I think it's all a good thing. It helps the trader, and the consumer, so to speak, on the consumer side. Here's what this is my thing, and again, let the group comment and maybe think I'm maybe losing my mind. Is I think the prop firm avenue is a very solid road, very good road. I think it's only going to get better, but it's one road. There is so much capital out there looking to find a home with relatively low interest rates globally. They've ticked up a little bit, but you know, I think a lot of times, and we talk in our program too, we have a whole section where managing outside capital, like just there's a lot of things you can do in that space. And all the questions we get are about, the prop firm route. But maybe take a step back and, 2024, new year, maybe this is some time to think about and say, why do I have to manage prop firm capital? What about other types of avenues that are available too? And it's not really discussed that much. And, a lot of people just either don't want to go that way or whatever. Quite honestly, it's much more friendlier. I think the rules more relaxed. It's you have better structure. There's certain things you want to have in place, but again, just open your eyes to that thing. There's so much capital it needs to find a home, and if you can do pretty well and again maintain discipline and you have a structure that's maybe with oversight, once you get that little seed capital and you do well, everybody wants to join the party. You're like telling people, no, 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 I'm enough. And, then there's like a regulatory avenue as well. But you know what? You'll deal with that problem when you have to. So think about the other avenues as well. If there's anything that I have found to be great is that side. It's been a blessing in my life and career. And I tend not to go the prop firm way, for me, but I love helping and guiding people who choose that. But open the eyes, be more of an entrepreneur, not a trader.
Good point. Yeah, you definitely want more the path of like private capital, and I think that's the thing I've kind of started with also a few years back. What do you think is the difference from this versus prop firms? Is it like easier? Is there anything that differs, or is it pretty much the same thing? Can you do both at the same time?
Oh, absolutely. You can do both at the same time. There's definitely different dynamics to managing capital and, the structure, the things like that. You have clients now, you have a customer now that you have to kind of like deal with. Is the risk profile aligned with their style of trading? I mean, I have people all the time saying, like, I want to trade the Bitcoin. We've set up a fund for Bitcoin. I'm like, well, it's not really me. I want to do the Bitcoin. And I say, why do you want to do the Bitcoin? Like, what do you care? If you get 28%, 32% a year, doing what I do, like, what do you care? Like, and they go, I want to do the Bitcoin. Like, it's just weird. But so you have to find that good fit. And so it's a lot bit. There's reporting, the stuff, but it's definitely like a fun journey. It's interesting. The most important thing we mentioned earlier is they don't care if about the result per se, but they just want to make sure the market didn't produce it. So if it's a Bitcoin fund and it goes down like 20,000 points, they know they're going to have a bad outcome. But was it the markets or was it you? This really puts pressure on you. I mean, you have to follow your rules and follow your plan. So keep that in mind too. It's fun, but sometimes it's a little bit tedious. But hey, so tedious and 32%, I'll take it.
Yes, we have a question here that it's going to be in a funny answer, I think. Red November here in the chat is asking about are 1-to-1 royalty risks better to target as a beginner than the 5-to-1s?
Yeah, it's actually a good question. And this is from like a risk manager talking to risk reward. The newsflash, it's really irrelevant. It's all relative. I mean, it's all proportion. So if you're going for 5-to-1 versus 1-to-1, the math says that statistically everything else equal should be the same. All right, should have the same sort of outcome. That's everything equal. I mean, two people pushing the button with different risk reward. Now, when it comes to the realities of discipline, right, confidence, things like that, with a 20% win rate, some people are fine. The best prop traders on Wall Street have 20% win rates. They can handle that. But can the new starter, for confidence reasons, have like 14 losing trades in a row and and things like that. So there's a lot of dynamics that play a role. The other question is, where is your stop itself? Like, does price have to go beyond an area where you're wrong? So if you're just doing like really tight stops and have a 10-to-1 risk reward, the math says it'll work out, but boy, it's going to test your confidence. And for new traders, I find that having more of a equal 1-to-1, 2-to-1, even a 1-to-2, something like that, just seems to be more in a psychological sweet spot. And this is sort of like a Tendler speak kind of thing, a Jared Tendler kind of nice motion is that getting that confidence is more important than the actual math per se, especially in the beginning. So I hope that answers your question.
Yep, that's a good one. Yeah, I would say that the psychology of taking 1-to-1s versus 5-to-1s is a lot easier as a beginner when you win more often, especially when you want to build the confidence of like being able to trade. I think for most people, maybe not all, but for most people, having a higher win rate is better than a higher rate to risk. So like you win more often, you kind of get more used to it. As you get more comfortable with the strategy, maybe you kind of get back down to what works better. Maybe 2-to-1s or 3-to-1s work better for you. Again, that can change, but ideally you want to kind of make it easy on yourself at first. Then you can change over time and kind of adapt to what's best for your strategy or for your edge.
Yeah, absolutely. And just to add on, again, when I talked about everything else equal, try to use two different dynamics. If you're a trend-based market and you're using a trend-based strategy, maybe take the 2-to-1. If you're in a chop market and you could use like reversion to the mean type strategies, 1-to-1 is fine. I mean, just take the crumbs, take the crumbs, take the crumbs. So mix it up, play around, journal your results, and see not just the results what are better, but also what you feel more adapt and comfortable doing, and that's going to help your confidence. That plays a big role.
I like that. Any questions you guys have, put them in the chat. We're gonna get wrapped up some here with the YouTube live. Any questions you have, put them in the chat, in the comments as well. If you're done live, we can answer those later on for sure. Mine PC is asking, how can we become a student of Michael? I want to go and just mention quickly, Michael and I run a prop firm at Desire Trade, which is called Ultimate Prop Firm Trading, where we cover how to scale up your trading with prop firms, kind of level things up to getting funded 6-7 figures in the next few years. This is going to be linked below. The first link in the comment is going to be that link. But Michael, you want to kind of expand on that and tell them what you're all about?
Yeah, we have a program at Desire Trade specifically designed for people looking to get funded, maybe struggling. They've tried some challenges, have struggling, and they realize, you know what, I need to take the next step to get there. We'll help you get there. We'll guide you there. I've done for this particular program, Etienne, for better or for worse, has put me at the helm, and I've done all the content. I try to put my 20-something years of experience and expertise into that. But it also includes, not doing it alone. And, that's something I take a lot of pride in and a lot of responsibility. I know this is not just trying to pass a challenge. You're trying to change your lifestyle and reach your goals and your dreams. I understand that. It's not just a name there behind there. And, my job is to make sure, we do our best to get you there.
Awesome. That sounds pretty cool. Anything you want to cover, Michael? Oh, actually, we have a question here. Cool. Kobe is asking, what is your opinion on expert advisors trading? So these are basically EAs, so algos into MT4, MetaTrader 4.
What do you think? I'll let the expert answer. Etienne, what are your thoughts?
I mean, I love algos. I run 2 algos myself, and that's because part of my trading now is like fully automated. I don't touch it. It's just like running all the time. These are the same strategies that I traded before manually, but I kind of put them into an algo to be able to save my own time, do other stuff with my time at the same time. So that's the goal. So I just trade the same thing I was trading manually, but with an algo, and saves me a lot of time every week. I don't have to look at the chart too often. I don't even look at the chart intraday now. Basically, it's all done automatically. So if you can code something that works like this very systematically and make it run like 24/7, whether you're traveling, whether you're like at a job, and you don't have time to take trades, that saves a lot of time that way. So for me, that's a big thing. I would not recommend just like putting random algos you find online onto your platform and running them. You got to do a bit of due diligence here, like either create your own stuff or buy algos that are like well developed, or learn from someone who's doing it now, and that way you're able to do it better. But I think for me, it's a huge key in my trading.
Yeah, I think it's a part. I mean, I'm not all in. I have a piece of my trading life in there. Real quick, last week I don't know if I told you this. Yeah, I was in an airport lounge, right? And when you travel alone, you sort of, okay, you want to go maybe get yourself another piece of toast or something, and you leave your, I'm not going to close my laptop and stuff. And I had an algo running. I came back, and there's a guy looking at my screen, and he had like, I'm like, oh my god, like, and I have a live algo running with a live account, and you're like, what? And he was just like, oh, I'm sorry, I was just fascinating, like, but at that brief moment, like your life just flashes before you, like, don't touch my algo. But it's kind of cool in the sense where like people are fascinated by it. It's and but I feel weird like leaving my screen, so to speak, even just to freshen up my coffee and get a piece of toast. I come back and like some guy's gonna ruin my account. Like, but it is kind of fun. It's good. It adds a nice diversification to the overall sort of portfolio management of my sort of trader life. So it's kind of cool, especially when traveling. I mean, like you said, we're traveling traders. It's I don't know what I'd do without it.
Mine piece is, yeah, the program is at Disaster Trade. Yes, Disaster Trade, Michael is working there. It's the platform program. So Ultimate Platform Trading is the program that we run together. So Michael is a really good tool, really good resource at Disaster Trade to help people to scale up. So he's there to help you with that specific topic exactly. Question here, we got a question from Red November again, asking about what's the best place to convert and code asymple manual strategies to algos. I know there's some websites, like some platforms you can do this. Some used to be free with some certain brokers. I think now you gotta pay for them. One of them is called Strategy Quant, I believe. And that is allowing you to kind of code without too much coding. So it's kind of good for that. We started off our algos that way many years ago. Now I have a chance to have a coder like full-time in the team, which is pretty cool to help us with all these things. Saves a lot of time and a lot of energy, so I don't do any coding myself anymore. But definitely there's some like free resources. Most of the free tools where you kind of build your own algos. They're a bit too basics for like the stuff you want to do. They could work for like certain like really easy algos, but for the stuff you want to do, like the managing the risk and stuff and the size, it's a bit too much tricky. Otherwise, there's like maybe some places where you can code. You can code by yourself on MT4 directly, or MT5. You can always code there directly. You kind of run it and test it there too. But that you gotta start from scratch, so it's a bit more tricky. I'll say you gotta learn coding at first if you want to code it yourself, or get a coder. That stuff works, whichever.
Yeah, I use in the US. I use TradeStation, and they have their own language, easy language. And they had a webinar, seminar 101. And I says, any questions? I go, yeah. Well, who named this easy language? This isn't easy at all. And but again, I just kind of shake my head. But we have a coder on staff that's just second to none, so we just use him. And I don't know what we do without him. So
Awesome. Any questions you guys have, post them in the comment section once we're done live. I want to thank you guys for being here as always. Make sure you put a like to that video if you liked it. If you got some value out of it, put the like. I want to come back here live as often as we can. We'll try to do more of these if we can in the future. Goals to be able to give you value, answer your questions, and kind of help you to reach your goals. Now we have a video coming up in a few days, so we'll see you there. Thanks, Michael, as always, for being here live. I appreciate that a lot. And we'll catch Michael, catch other traders in a future video pretty soon.